Hi guys, quick update here for the stock market and a few other asset classes here, 26th of September 2022. So obviously things are looking a bit dicey here. It was really Apple which was a little bit confusing with this very disgusting X wave that is formed here. That's an ABC. Multi-year tops have been formed here. We called the top in all of this, ages ago, 6-7 months ago. None of these are good buys. Large super cycle corrections are undergoing here, and in terms of the stock market, grand super cycle correction, very much a lost decade here on these Western markets. Major wave fours are getting formed here, major super cycle corrections, much like Bitcoin is going to end up in this range between 3k and 70k for the next 10 years. Well, maybe not that long, but it's going to be range bound for years. We're going to be here for years here. None of these are good buys. Microsoft, we said pre-pandemic highs. Tesla, that is a 5 bajillion year top. Only John Spartan, who's cryogenically frozen himself to defeat Simon Phoenix, the demolition man, is going to be alive to see Tesla make a new high. Now, Facebook's interesting. Obviously, Facebook is getting quite close to a low here. Once again, I did call 1, 2, 3, 4, 5. So when it was here, I said 83. Right? It's no good, getting bearish Facebook down here when it's at 135. I mean, what's Nvidia doing? So when Nvidia was here, once again, go back to the YouTube video. So 7-8 months ago, I called 100, right? We're not quite done yet. Obviously, the real level to buy is about 85 to 100, but it's getting quite close. Now, Meta, I mean, it's this descending wedge. I mean, it's a 3 inside candle breakout here. So I think it's coming to an interesting level here pretty soon. I think it's very close to some kind of low. Meta is so 1, 2, 3, 4, 5, 3, 1, 2, 3, 4, 5 wedge. So rising wedge, maybe 130, 133. Honestly, it's very close. We could get a nice little squeeze, refill some of this gap up here at 270. Maybe then we roll over for the big one. So we are going to be here for a while. We're going to be here for years, going up and down, up and down. Generally, the trend is down though. Now S&P. A few counts which we're working with. I mean, we do have a very, very bearish interpretation, which we've mentioned, just a straight ABC down, coming all the way down to here. I don't think we take out the pandemic lows just yet. I think there's reason to believe, there's so many interpretations there, but there's reason to believe eventually we might tag this low. But that is worst case scenario here. We continue to collapse in this very impulsive, deadly looking move here to 2500. However, we do have alternative counts which I'll share with you right now. An A, B into a C, and we also have this kind of more triangular looking count. So basically we're looking at a low possibly in the next 2 weeks between 32.5. Let's just go off the SPY because you just multiply it by 10, don't you? Somewhere around here, of which we are very, very close to finding that low. Then we're expecting possibly a Q4 rally going into, let's say, January, February time, forming another B wave or another X wave. Then we end up coming back down again, okay? Assuming it's not this big one right now, which once again gets us to down here. Now, we've mentioned this many, many times before. Eventually, we are going to trade here, though, in the lower half of this range, right? So let's just quickly split this up, because the market has to repair itself. Okay, frankly, I would welcome a move down into here now. It'll make the coming years very, very easy to navigate because it'll be a V bottom at 2500. So if we don't do that, we'll bounce there 325, 340, go into a little fake 3-month rally into the end of the year, maybe back up to 4k before the end of the year. That will actually be quite incredible, really. Get everyone in a nice little bull trap, and then we roll over once again. So, much like Bitcoin, we're going to be exploring this range for years, right? As we said, for quite some time. Obviously, Nasdaq is, huge level at 10k Nasdaq. Very, very interesting. Q's, just looking at that bounce, right? Looking at that bounce at 255, okay? like I said, we do have an interpretation which is a straight move down. I mean, obviously, if you take your 1-to-1s, you can get an extension here. That gets us much, much lower down here. I mean, we do have targets at 203, 205. I mean, is there enough violence and enough sort of aggression in this move to get it down to there just now? Or do we bounce here at 240, 255, then do our little 3-month, 6-month bounce, and then we come down? Eventually, though, we do have to properly trade out this area between the pre-pandemic highs and the pandemic lows, Bitcoin included. Bitcoin's the exact same, right? Anyway, so that's it really. So let's just quickly go on the SPY once again. And if you just break this down, I mean, I would rather read that as an ABC, to be honest, for various reasons, which I won't go into now. We'll be here for days trying to decipher this count from top to bottom. Obviously, I can't share the charts which I share with the group because that would be unfair, giving away too much information there. But it's probably an ABC. I would prefer to count it that way as opposed to a 1, 2, 3, 4, 5. I would prefer to count it as an ABC. Everything has been 3 waves this entire year, so that's probably a 1, 2. Something like that, basically. That's what I think is going on. Obviously, we're approaching the June lows here, which are weak lows because they were formed over summer. Real moves tend to occur between September and May, not May to September, September to May. So we're kind of in the middle of a sort of third of a third here, but I don't think it's the big one. The big one which I've seen, which is a huge call, that straight 1, 2, 3, that is a gigantic collapse which we're forecasting here. 1, 2, 3, 4, 5, and that's just a larger A, and it's 1929 all over again. That gets you a huge C wave. I mean, I have done a bearish interpretation here to about 1260, but that is a huge call. That this is a third of a third of a third of an A, of a huge 90,000% collapse all the way to 666. I'm not even going to go there right now. Let's not even go there. Let's just not go there. Let's just stick to this. Yeah, we'll stick to this. That it's an ABC. So we're in the third of the third. Get to around here. Let's just do some basic fibs here. So let's just say hypothetically we've got this count correct. First of all, you've got to compare the C to the A. So let's compare to C to the A. Well, that gets you 3,464, right? So you would expect this market to get at least down into there. And let's just say we take the 1.618 of this presumed 1, 2. Well, that gets you there for the third, then the 4, then the 5. So once again, we're getting into that region. Also, that lines up with the pre-pandemic highs. And as we know, there's a 50% fib. There's probably a gap in here somewhere too. I think that's an SPX gap. Let's just, So there's a clean gap right there too. So there's a clear cash gap. These are not futures gaps. These are cash gaps. Is there a gap there? Let's have a look. High was 3330. There's a small gap in here as well. So that would make a lot of sense. So 325, 340. Then I think we get a nice little rally, assuming, of course, it's not the big one, which, once again, I'm not forecasting a 1-2 collapse to 666 right now. The big one, as I deem it, is a lower degree, A, B, C, which gets us to about here. Now, many people actually believe this is going on. That it's not the first one to here, then we bounce Q4. Many believe it's this one. This one refutes the whole Q4 rally. We know in a US midterm election year, we've called it since January to the group, that if something's going to kick off here to the upside, it's going to be in October going into Q4. This obviously still gets us lower. Probably bottoms out, let's say, Christmas, December, January, New Year sort of thing. Probably pushing into the New Year, only because then you can get a lot of money here going into the New Year, shake them out, and then you get the V-bottom rally. I mean, technically, that gets us back to 5,000, just to then fail again. So you got to love that. 2,500 to 5,000 just to collapse back to 2,500 again. And then we get the real move. Once again, that could last years though. And we are indeed going to be here for years. So I think people have to accept that. Just set up a huge 1,000 days till expiration iron condor above and below the range. Obviously, I'm joking. Good. So, pound. Obviously, we think the pound's bottomed because you just do the opposite of the news here. You cannot get more bearish headlines than the pound. Pound likes to flash crash. I mean, to me, that's a 50-year low on the pound. So, whilst John Spartan will be the only man to see a new high on Tesla, as it turns out, John Spartan will also be the only man to see a new low on the pound. That's a 50-year low on the pound. I expect the pound to now rise. It might take some time. I'm talking years now, right? So, this years. This is we're on the monthly chart here. I expect the pound to now rise quite heavily, actually. 1.66, 1.8 by the year 2030. I think the euro's bottomed as well. Now, obviously, pound makes up 12% of the index. I mean, this has been quite hot, difficult to call this exact top. It's gone a little bit higher than I thought. I thought 112 was the limit. Technically, you can run all of that as a bit of a shakeout above the 112. So if the pound starts rallying here and the euro start rallying, dollar is going to be in for some pain, which once again supports the idea of a Q4 rally. We need yields to fall. I think yields topped on Friday, by the way. We'll get into that in a minute. I can count a clear ending diagonal which suggests the dollar is going to fall here pretty heavily. So lots of interesting things going on. Once again, supports the idea the real moves don't really occur May to September. It's always the other way around. Most volatile day of the week being Tuesday, followed by Friday, followed by Monday, followed by Thursday, followed by Wednesday, based on the statistics which I have. So you really have to focus every Tuesday, Friday, and Monday between September to May, and then not look at anything for 4 months and then come back again. Those are the 3 days of the week you have to really focus. This is something which we've mentioned, not so much anything to do with Bitcoin or anything else, but this is the percentage of stocks above the 200-day. I mean, you can see my alerts. Obviously, they've copied my alerts over from my actual charts. Because obviously, I can't share the group charts here. That would be unfair. This going below 10 is a huge deal. Anytime this has gone below 10, it has been linked to a major bottom in the stock market. And if you go on barchart.com, you can actually get data here from the previous crash in 1999 going into 2000, okay? 10 is a really big level. So to me, this is very close. Obviously, we're not there yet. We're just forming a bit of a wave 4. Even that, you could read a bit of a wave 4. One more push up. I get the feeling this market wants to rally here pretty soon. Too many things are coincidental for them not to be linked. The pound's made a 50-year low. Euro's bottomed. Dollar's very close to falling. Bonds are a very good buy right now, and yields have topped. So getting too short right now, is it a good idea? I'm not too sure. There might still be some more pain, as we've said, but I suspect, there's some very, very good stocks here at a discount. Right, bonds. I mean, to me, that is a low on bonds. It's just formed the 5 off the 5 now. So bonds are in. I mean, you're getting a 4.29 on a 2-year bond in this kind of market. That is a 17, 15-year high. So, it's all well and good calling for a bond market collapse. We called the collapse when it was at the top. That's the whole point of this game. I told someone in my group, I told the group it's going to go to 100. And I think they were dollar cost averaging into bonds down here. They're not understanding it's the $200 trillion bond market which is collapsing. That's the whole point of this entire collapse. It's got nothing to do with the stock market as such as the bond market. But even a collapse requires some relief rally, surely. So surely bonds can rally towards 120. Yields. Let's have a look on yields. I mean, have they actually made a new high here? Well, interestingly, no. So is that Friday, 23rd of September? That must be Friday's session. So with everything that's gone on here the last 12 hours, yields actually haven't made a new high. So obviously you're fighting the trend, and we get that, right? We understand that major support lines have been broken here, and we understand that. Once again, we've done YouTube videos on this going back a very long time. Don't get many views because they get shadow banned. Not much I can do about that, is there? So maybe we call for a retest of this line. I mean, technically it's already been retested. So, but 1, 2, 3, 4. So surely bonds are looking pretty attractive up here. That would be my take. Now, what else can we have a look at without giving too much away? And well, I mean, I don't think it's relevant other than from a day trading perspective. I'm not sure there's much you can really glean from that. There's another indicator which I won't really share right now, but I don't think the put call ratio is all that relevant right here, right now. But that would be my take. And the SPY, once again, very, very high volume here, which is kind of linked to you're in a third wave. Yeah, you're in the third wave. So I would rather count that as an ABC down, and then count this as a 1, 2, 3, 4, 5. Yeah, so 339, 340, 3200 on the downside. That seems to be the level where you think this market's gonna bounce. I know Goldman said 3600, so you just do the opposite, and then someone else mentioned 3200. I can't give away the name, but big people are mentioning 36 and 32, which kind of makes me think that they've done that to overshoot and they've done that to undershoot. So it makes sense it would bottom somewhere in between that range. So somewhere around here, surely this market is set up to a bounce, assuming it doesn't want to go to the much bearish alternative, which is 2500, then a V bottom move to 5,000, and that is an unbelievable move. That, I mean, talk about an expanded flat, because there's no way anyone's gonna see this coming unless you're prepared for it. Obviously, there's no way anyone out there could possibly see that coming. Once again, this would be actually welcomed because we repair the market, right? The market doesn't have to go here to repair itself, by the way. We've identified levels here between 23 and 24. And then we run the new highs, and then we come all the way back to, run this low, and then we get the actual blow. There's no way anyone can ever forecast this or can ever see this coming unless, of course, they've watched this video. Because by the time it gets to 2400, everyone would have been shaken out and calling for a 1929 collapse. So the level of put action down there at 25,500 is going to be pretty bad. No one's going to see this coming, which is what makes me think it could happen. It's not my base case, by the way. I'm still of the opinion we're kind of coming towards the end of a completion of the diagonal here and this ABC WXY business. Then we rally. Then we come down here next year. However, if the reaction to the midterm is crap and it's just a little bear, a bear flag, not a bull flag, it's a bear flag, then we do this. No one's going to see this coming. To go from 2,500 to 5,000, 100% move, just to then collapse all the way back down to the pre-pandemic lows, run these stops, and then do this again. Wow, unbelievable move. Anyway, let's go on to some altcoins here. So Thomas, the Tank Engine coin, is looking very, very tasty. I mean, that's getting very close. It's not quite ready yet. You've not quite hit your fib levels, but you're getting very close. This altcoin market is always a leading indicator market. I won't tell you exactly where it's going to go, but you're getting very close. ADA, I don't think it's ready yet. I don't think it's quite ready yet. I'm reading ADA as a descending triangle, right? We know descending triangles are bearish patterns. Just like the greatest call of all time on Verge, go and watch the video. That was an ascending triangle. This is a descending triangle, right? Never again will you see a 30x move in 2 weeks on any altcoin. Or it's very, very rare for that ever to have happened. So I'm not convinced these altcoins are good buys just yet. But honestly, the next big dump is what we're forecasting here in the group, and then we could get a huge rally. I don't think any of these highs get challenged, by the way, but you don't need a high to get challenged to, let's just say, well, I can't give you the exact target. That would be unfair. Let's just say it's going to bounce at 0.33. You don't need an 8x to make money, do you? But, look at the stops. just sitting above there waiting to get taken out. They're just waiting there to get taken out. That's the eventual target. Question is, where would you buy? Would you buy here? Really? The more times you hit a level, the weaker it gets. So fascinating. I think we're very close to quite a nice rally here going into the US midterms. I don't want to give too much away. Shall I give DOT away? Let me think. Yeah, go on then. Why not? Yeah, that's not ready yet, basically. That's all I'll say now. I won't tell you how low it's going to go. It's a bit of a giveaway, really. But why do they copy alerts over like that? Yeah, and then just the last thing I wanted to mention here, while I've, of course, we share all of this on the group. So it's useful to be in the group because I don't always get the time to do a YouTube video. So, I mean, this is all just one big expanded flat WXY, isn't it? Probably. So the way that we've bounced it on this day, ever since then, I've been bullish on the dominance. And I think there's a good chance we can make it, eventually back up to it. Whether we go there in a straight line or whether we have like an interim altcoin rally first and then do it, I think eventually, though, there's the possibility we go all the way towards 50%. I'm not sure how relevant or how useful that information is, but it can be useful if you're looking at the patterns, which is why currently this appears to be wanting to trend to at least the 50% of this entire range, which is about, I don't know, let's call that 43.5. So I don't think altcoins are really ready yet to be bought. Altcoins do very well when Bitcoin goes sideways and altcoin dominance goes Bitcoin dominance goes down. But when Bitcoin's going, I suppose it is going sideways right now, but Bitcoin dominance is going up, you really only want to be holding stables or Bitcoin. So I'm not convinced the altcoins are ready. They are getting very, very close. I've got a few. I mean, we cover 20 of them in the group regularly. So there comes a point in time where there's only so low something's going to go before it bounces. Anyway, I think we can finish off with Bitcoin. This is what I'm working with now. I mean, it's I've made a 30k YouTube video here, which there's not nonsense there. I don't speak nonsense in my videos. It's not my fault the CPI reaction was so bad. Obviously, bad timing to do a YouTube video doesn't really change the fact that it's still possible for Bitcoin to squeeze here towards 30k in some kind of counter wave correction. So that's all I was saying. I was saying, look, once this is over, we could easily get a nice little squeeze and then come back down again, right? I've already done YouTube videos to explain my opinion that eventually Bitcoin has to trade between these levels, right? You can go back 6 months ago. We've been bearish on this market since this bear flag, which was always going to break down. So all I'm saying is there was just the possibility if a Q4 rally, 30, 40k, then we come back down again. I think everyone is agreed. Eventually, like I said, it might take 6 months, a year to get down here. Might be sooner than that. We have to trade this level. There's a lot of market to repair down here. Once again, there's gaps. There's VPOCs, there's naked levels, there's everything that you would see on the ES. Maybe not as much on the ES, but because we get more clearer signals there. And, we could be here for years. I don't think Bitcoin's going to make a new high. That's not what I said. So my last YouTube video, fine, timing aside, actually was very relevant, I think. And I think those who understand my videos and who understand that they're just a snapshot in time, short term, anything could happen. But the general idea was that, look, we're going to remain in this green box for quite some time. You see how bullish you're all getting because it's green, and now you're getting bearish because it's red. You gotta love interactive brokers for that. Always best to remove that color, just change it to black or something, or white. Psychology plays a big part in this game. Anyway, so we're going to be in this range for quite some time. So that was the point of that video. No one's more bearish to me. Okay, I called for 20k 2k crash, which technically could still happen, right? It could still go to 2k, but all I'm saying is there was some kind of counter leg correction which could take part. So I don't think anything I said in that last YouTube video was nonsense. I think it was quite reasonable. And here we're just working with some kind of ending diagonal, probably A, B, C, D. Once again, you shouldn't really label them like this, just the way that I've always done it. So something like that. And those who have been in the group, I've been eyeing up 15,000 and 14.5 to 15,000 for quite some time. So maybe we do something like this and then we do this. So that's my take. I think the altcoins are very close to a bottom though. Anyway, I think I'm going to wrap it up there. Anyone who wants to join the group or take a look at some courses, everything's there. The feedback has been very good as you would expect. And I'll catch you guys soon.